It has been almost 3 years since we last traveled abroad. Hasn't it been a long while since you need your passport? Is it expired already? In fact, other than passport, your investment portfolio may also expire. With the change in stage of life, our financial needs could be different. Reviewing and adjusting the investment portfolio from time to time could help plan well for the future. The risk factors affecting the global economy and investment markets in the past 2 years have not fundamentally changed. Geopolitical tensions stay and inflation remains high. As the tightening policies of global central banks come into effect, developed market economies may enter recession. These are the uncertainties we face. However, at the same time, comparatively, equity valuations remain reasonable, and the technical picture remains light. As inflation slows and the global rate hike cycle comes closer to an end, global financial conditions and investment market sentiment may improve. Investors may consider gradually increasing risk exposure in the first half. The stock market may rebound before the trough of the earnings downgrade cycle. We will search for a bunch of tourist spots and famous restaurants before we go on a trip. While we care so much about a few-day travel, how can we not pay closer attention to our long-term financial planning and asset management? In the first quarter of 2023, from an asset allocation standpoint, investors could consider reducing cash holdings, allocating some of that to bonds and alternatives, and reducing some of the underweight in equities. This may help diversify portfolio risks. Most of the developed markets are facing a higher risk of economic recession, and corporate earnings may be revised further downward. However, Asia may continue to benefit from an economic reopening, and inflation is relatively under control. If the US dollar reverses, the stock markets in the region may benefit. China may gradually uplift the COVID restrictions, and the Chinese economy is expected to improve in 2023. Geographically, Europe is slightly underweight in the first quarter. The US, Japan, China, and Hong Kong equities are neutral, and Asian equities is slightly overweight. There are 3 keys to financial planning. Select a quality service provider, construct investment portfolio according to your needs, and review your portfolio from time to time. Only by taking these steps, you may realize your financial goals earlier. Given real rates and inflation expectations may have peaked, the upside of longer-term US Treasury yields may be relatively limited. As investment markets may remain volatile, developed market sovereign bonds may benefit. In the face of a continued economic slowdown, corporate credit spreads may widen from current levels. The view on core investment-grade corporate bonds is neutral. Fixed income assets with spread advantage, such as preferred securities, which are also investment-grade, may diversify the investment risk of a bond portfolio. In terms of alternatives, real assets may be considered as an inflation hedge. Global REITs or infrastructure investments, for instance, may diversify the risk of equity investments while obtaining better potential dividend income compared to global equities. Every journey would add color to your life, so as investments, if you plan ahead, investments may add color to your life too. We wish everyone an enjoyable journey on investment.